Okay, thank you, Sebastian. Again, my name is Jeff Wood. I'm a sales manager and loan officer with HomeStreet Bank. I've been with HomeStreet now 23 years. Um, and so I'm going to talk about buying a home with down payment assistance. Now, down payment assistance has a lot of different categories, and we're going to go over those categories, but not everybody fits in the same box. And so with the different categories that we have, every city, every county, every state has different down payment assistance. So just because you might not see it on here doesn't mean it doesn't exist. We do have it. This is the predominantly the main ones that we work with. There's actually a couple new ones I'll touch base at the end that the states come up with. And so it's kind of a neat program that just came out last month. So but again, what I'll do is I'll talk about the down payment assistance. And so what we'll do is kind of go through what is down payment assistance, kind of an overview. How is it paid back? Is it paid back? Is it a grant? Do you share appreciation with whoever gave you the money? All the requirements, the restrictions, like I talked about, there's income, geographic restrictions, what your down payment requirement is, if there's education requirements, programs have limited funding as well. Then after that, we'll talk about next steps. I'm just kind of cover real quick budgeting and first time home buyer checklist. We'll go over that quickly because that can take a little more time. And then I've got a bunch of resources that we have, and then I can also have you touch base with some other resources that we have as well that might not be on those slides. Because again, we are evolving with these down payment assistance. There are quite a few out there. There's some newer ones, and we're hoping to bring in some newer ones down the road as well. And then as a UW employee, I'll talk about the Affinity program benefits besides these classes that we have, what other things that we do cover. So first thing we're going to talk about is what is down payment assistance. So a lot of times I have customers like, oh, I need down payment assistance. And I first ask, why do you need down payment assistance? So there's different answers for every customer. But the main thing is to look at with your down payment assistance or your DPA program is what's it going to do to help you contribute to buy that house? So if you need to bridge the gap between your down payment and closing costs to help you get in, that's usually the biggest thing. I've had customers get in with as little as $100 into a house with the right down payment assistance. Other programs have a little bit more requirements that you have to bring in of your own funds. Now, it isn't like, oh, I get free money. There's a lot of different programs out there. There's a lot of different payback scenarios on a lot of these programs. So most of them are needing to be paid back. Some are not. So we'll take a look at those. But there's different types of programs, like I said, in every county, every state within the US, there's different programs that we use. So we're going to talk about a few different things. And the cool thing is some of these programs that we do use are multiple, we can layer them. So you can layer some programs on top of others and increase your down payment with these other programs. So, and again, you may have questions at the end or during the chat, just let me know. But again, if it's more tailored, if you want something more tailored to your own questions, we can take this outside the class as well, just to get your questions answered as well. Because they're, like I said, not everybody out of 10 people, you might have 5 people use the same program, maybe. Most everybody will probably be looking for different places to buy out of 10 people. You probably have 6 or 7 use different programs. So, but the first thing we want to look at is what kind of down payment assistance is out there. The biggest one we have is deferred second mortgages. So it's a second mortgage that they will give you the money as a loan, but it's a silent second, which means you do not make payments on those loans. So sometimes they have 0% interest, sometimes they have 1% interest or 3% simple interest, which is nice when you say simple interest, it's not compounding. So if you have a 1% interest rate on $10,000, you're gonna have $100 a year in interest for 30 years. So the maximum you'll pay back on that is $3,000 over a 30-year period. So you pay the $10,000 plus $3,000. So it's simple interest. It's not compounding like credit cards or other programs out there. And so you don't have to make payments on it. You only have to pay it off once you sell your home, refinance, or pay off your first mortgage or rent it out. A lot of these programs are for owning the property and living in the property. So if you're renting it out, they may call the note due. You have to pay that second mortgage back. And then refinancing, a lot of times you're paying that first off. They're going to want that second paid off, especially if it's at a 0 or 1% interest rate, because they don't want to resubordinate or re-record that loan behind your mortgage. So they want to have it paid off now that you've been in a home for a while. One of the better programs that we have are grants. The Federal Home Loan Bank is a grant program that we use. We get some once in a while from, you'll see some of these larger banks when they get sued, like Wells Fargo. I'm not picking on these banks either, but Wells Fargo, and I want to say it was Countrywide at one time. They got a large lawsuit against them. What they did is they took those funds and they made it available for first-time home buyers in a grant form. And so with the grants, if you live there for a certain amount of time, you don't have to pay them back. So the one from Wells Fargo that we had about 10 years ago, I think it was, they get, as long as you lived in the house for 7 years, it was forgiven after 7 years. Now, the one we use now, Federal Home Loan Bank, it's a $15,000 grant. And first time home buyer, it has income restrictions, but it's statewide. You can get up to $15,000 and you can use that for closing costs, down payment, whatever you want into the transaction. And what's nice is that one is usually tied to the deferred seconds. So you could add that 15,000 to a 15,000 from another program, or 3% from another program. So there's different things you could do with those grants and layer them. I do that quite a bit. The next one is a program that we don't see as much anymore. It's a shared appreciation. A lot of down payment assistance programs with the smaller communities have kind of got away from the shared appreciation. One of the biggest ones was Habitat. So if they helped you get in with 20 or 25% down, when you go to sell the house, you have to give 25%. You have to pay back what they helped you with and 25% of your gain on equity. So those models are kind of phasing out. I don't work with too many companies that do, or too many nonprofits that use that anymore. But the shared appreciation is a model that is out there. So the nonprofit will pay themselves back when you go to sell the house or refinance it, and you got to pay them off. And so they'll take that extra income, that or extra equity that you've earned in on your property, and take their percentage of that equity. So that's what the shared appreciation is. And then the last one we talk about is community land trusts. And we're seeing this model pop up a lot more. I think we have 27 land trusts within Washington State. Might actually be a little bit more than that. I work with 4 of them in Washington. And so out of 27. So there's quite a few out there, but the predominant ones that we work with are in Seattle, Bainbridge Island, King County, and there's one down in Vancouver that we work with. But with the community land trust, it's a different program where you're buying the house and you own the house, but you're leasing the land. The land trust owns the land, so it keeps it affordable for each home buyer. So you're not going to get a huge gain on equity because you're buying this house for 500,000 and you're going to sell it for 1.5 later on. They keep it affordable for the next buyer. So if you buy it, so you can get a house in Seattle. I'm doing one right now where they're buying the house. It's a $500,000 house. Their mortgage is $215,000. So with the $215,000, it's a relatively low mortgage payment on $215,000, where you're having a silent second, basically, that sits with equity within the land trust because they own the land. And so that land trust will keep the ownership of the land. And when they go to sell it, you go to sell the home, they help you sell it to somebody else that qualifies for their program. So it's a great way to get into a house for low cost and still earn some appreciation on your house. You're not going to get a huge payday on your appreciation, but they keep it around 7% per year based on the amount you've got into your mortgage. Some land trusts are a little bit different, but we work with three different here in King County and Kitsap County. So we'll go on to the down payment assistance example. So most of our programs that we do work with are Washington State Housing Finance Commissions. And so the one nice thing about the Housing Finance Commission, all the programs are the same. There's like 80 different lenders. We all do the same loans. Some of us are a little bit more experts at the program, so you do want to find somebody that knows what they're doing. Now, what's great about this program and UW employees is you get the discount as a UW employee. So we pass on the discount even with these programs. So we have to charge certain fees for the Washington State Housing Finance Commission. So if we charge 1%, we're still going to give you a 0.5 point credit. And I'll talk about that a little bit towards the end. But with competing with other lenders, we actually give you a 0.5 point off where they're not able to, because they have to charge a certain amount on these programs. And so, but with the down payment assistance programs, typically you need a 660 credit score. They've actually lowered that a little bit in some of the other programs for the FHA and VA loans for down payment assistance. I think you can get in with as low as 620. But you could do a home advantage or house key opportunity home loan, and you could tie those in with their second mortgages. And so what's great about those programs is they usually keep them the pretty much market interest rate or below market interest rate. And you can get into the house with their down payment assistance, which is $15,000 or 3 to 4% of your loan amount. So it varies depending on the program. And the Home Advantage program is great because you don't have to be a first-time home buyer. A first-time home buyer is somebody that has not owned or been entitled to a home loan in the past 3 years. So if you haven't owned a home in the last 3 years and you haven't been on title with anyone, you're actually a first-time home buyer again. So you qualify in most cases for the Opportunity program. But if you don't, the Home Advantage program is a great way to go because their income limits go up to $180,000 for Home Advantage. Opportunity, it's about $107,000 for King County. So each county is a little bit different for their income limits. And so it does vary on how much down payment assistance that you can get on each program. They have to be paid back, but the payment is deferred for those 30 years. So once you refinance, vacate, transfer, or sell the house, you do have to pay it back. So we can always go over and find out what the best product for you would be. So this kind of shows you a down payment assistance for the Home Advantage program. And what's nice about Home Advantage, it's a 3% or a 4% down of your loan amount. It's at 0% interest rate. So you get a $17,460 as in this example. It's at 0% interest rate. So you owe $17,460 in 30 years once you pay off the first mortgage, or if you sell the house. So if your sales price is $450,000, your loan amount with 3% down is $436,500. The down payment required is $13,500. Your down payment assistance from Home Advantage is $17,460. So that covers your down payment, the $13,500, and you get about just under $4,000 towards closing costs. So this is where the Home Advantage program comes in handy, where you can actually get in with a lot less. And if you have seller paid closing costs, or if you have somebody giving you money for down payment as a gift, you can use those funds as well. So you can get in with a lot less money. This transaction, you probably bring in about $4,000 to $5,000 of your own funds. So we can talk about you can find out information on that through homestreet.com/benefits. But this just gives you kind of a quick example of a house. It's become a lot more of a condo product in King County, where house prices are continually increasing, but they do use this product for higher loan prices as well. So you can go up into the high jumbo limits as well. So the next part is grants. So I talked about the Federal Home Loan Bank, and we get these grants from the Federal Home Loan Bank, and it's low to moderate income. So you have to be 80% median income within King County. And I don't have that number off my top of my head right now, but with 80% median income, depending on your family size, we can look that up depending on where you're buying. You have to have a first-time home buyer class. Typically, they want you to reserve the funds if you're within 30 to 45 days of closing. They used to let you reserve it for up to a year in advance. They don't do that anymore. They want you to use it within 30 days, 30 to 45 days. But again, it's $15,000 grant funds. You can use it for down payment, closing costs. You can add that to your Home Advantage or your house key loan and add to the other $15,000 or $17,000 that you have for down payment and reduce your overall principal on your first mortgage. Now, if you stay in the house for 5 years, home grant, the Home Start grant will be forgiven at 1/5 per year. So they'll forgive $3,000 every year for 5 years. So it won't be there after 5 years of being in the home. It's a great program to have. And this money goes really quickly. So we get new money April 1st. It was already gone before May hit. We got new money, received new money July 1st. I'm not sure where the amount is right now, but we do have some available still. Okay, and then the last, next one, down payment program with community land trusts. Again, I kind of talked about it a little bit, but a family or individual purchases a house that sits on the land owned by the land trust. So it's more affordable, and we'll talk about the price here on an example here real soon, but you're leasing the land from the land trust for 99 years. So whenever you buy the house, let's say you're buying August 30th of this year, it will have a lease on that property for the next 99 years. So that won't change, and so it protects you, it protects your family, so nothing can happen with that property. It's not like they're going to lease it for a year and then sell it out from under you. But for an example, a $500,000 home, I kind of talked about, it can be sold for 200, and so you buy your house for 200,000. A lot of times they just want you to bring in 1% or $2,500 of your own funds. Each land trust is a little bit different. For this example, typically they want you to bring $2,500. And what's cool is a lot of times you can take your closing costs and wrap those into your loan as well, because we use your sales price of your home, 500,000, as your value of your house. And so 200,000 has enough equity, there's no mortgage insurance, and you can actually have a little bit higher loan. So let's say you did a $210,000 loan and incorporated all of your closing costs. So each land trust has a little bit different requirements, but again, 1% is typical of what they require you to bring in. I've had some, I think the Bainbridge Island one, I want to say is $1,000 that you have to bring in. They're a little bit different. And I think Habitat, which now uses the 1%, they use the land trust model for Habitat homes in King County. They want 1% with their program. So homeowners agree that if they do sell the house in the future, they keep it affordable for the next buyer, and the land trust actually sells it. They don't have realtors involved, which makes it a lot more affordable for you as well. So you don't have to pay realtor fees as a seller to sell your house. They take care of it, find the next buyer. So it's a great way to go. So I'll show an example of that. Just a quick example on the community land trust, using the home value of 425 with the leasehold of 150. So your purchase price is 275. Your loan amount is 275. There's zero down payment in here. So you just have to come in with your closing costs. And sometimes, like I said, you could wrap those closing costs in. And you can also use the land trust, and Habitat loans have a special rate. If you're under 80% median income, you can get a 4.5% rate right now. So it's a great way to get into a home. Low interest rate. I actually just locked one in for Habitat today, at 4.5. And then the standard purchase price shows a 425. Your purchase price is 425. You have to come up with your own down payment, 3%. That's $12,750. So this shows you right there, it saves you $12,000 that you don't have to come in with your down payment. So this is, again, it's every single situation is a little bit different depending on the land trust and the price of the home. But typically they do help with quite a bit of the down payment with the leasehold. And so that leasehold stays with the property for the rest of that property's life, as long as the land trust wants to keep it in their portfolio of homes. So we'll go on to the next one. So additional requirements for down payment assistance. So income and geographic restrictions. A lot of times we look at 80% median income, 65% median income, 100% median income. And then they have restrictions within different counties. Down payment requirements are different with each program. All of our programs require homebuyer education. We could do online courses, typically online courses, $50 per person. We do in-person classes as well. We also have a link to in-person classes if you want to go do in-person. Just depends. It's a 5-hour class. If you want to go through the 5 hours in person, it's a great education. Some customers, they prefer the online, get it done on their own time. My customer that just logged in today took 3 days to do it, took her time, got locked in. But had to wait until it was finished. They do have loan limits depending on the program. So depending on where you're buying and how much of a house you're buying, they may have loan limits on programs. Lender participation. With HomeStreet, we participate in most programs within Washington State. There's very few that we don't work with, especially with Housing Finance Commission. And then you must occupy the property as your primary residence. Non-occupant co-borrowers are not allowed. So if you go and you're if you're going to rent the property out, they may call your note due. So you do need to be aware of that. If you want to keep that property, you might have to refinance. Excuse me. So recommended next steps, we'll kind of gloss over this kind of quickly so that way we can leave some room for questions as well. But this just kind of talks about some things, how to get started. Because that's usually the biggest question I get is like, okay, what do we do? I want to do this. So first we want to talk about budgeting for a home. So the one big thing that they like you to do is create your budget as a family. Get everybody in the family working, figuring out, okay, not working, but working to figure the budget out. Your spending versus income. You have to figure out what you need to have on a monthly basis to pay your bills, based on your needs and your wants. So if it's something that you need and we have to have it every month, then you're going to put that. But if it's a want, maybe it takes a back burner until you've got your savings goals figured out. But you want to figure out the right budgeting plan. It's not something that's written in stone. It's something that's flexible. You have to see, is this going to work? So a lot of times what I do is with customers, let's say you have a $2,000 a month rent payment and you want to mortgage at $2,500. I usually tell them, okay, take 2,500, 2,000 of that goes to your rent already. So take 500, put in savings and live normally. See how you live with your budget, buying groceries, going to the movies, going on trips, planning up camping trips or planning on vacations, different things. Get your budget figured out and see if you can save that $500. If you're doing it per paycheck or if you're doing it per month, put that in savings and don't touch it. What they want you to do is see if you can get your savings built up without going out and using your credit cards and spending elsewhere to kind of keep up and not sticking to that budget. So the difference between your rent payment and that savings goal of your future mortgage payments is considered payment shock. And so they want you to prepare yourself for that payment shock. If you can live with a $2,500 a month payment and still live life comfortably, making your payments on everything else, buying the different things you want to buy, going on family vacations or going to the movies or going out to dinner. You want to look at that and make sure that you're still incorporating that into your life, because you don't want to be house poor where you're living in the house and all you do is make your living to pay the house mortgage and just barely getting by. So you want to make sure you set yourself up really well before you go and make that purchase. And so the other thing you got to keep in mind also, when you buy your house, you may have, you are now the owner, so you got to upkeep the house. You might have HOA dues if you have a condo, or if you're living in a community that has HOA dues, you've got to cover all your utilities now. Any improvements on the home, you have to do any things that you need to fix, your water heaters, your microwaves, your fridge, your dishwasher, anything that happens or breaks, you've got to fix that. So you have to kind of incorporate some of that into your budget as well. Okay, next part is just kind of a checklist for first-time home buyers. So we want to take advantage of the financial education that we have. We talk about the first-time home buyer classes. We talk about budgeting. We talk about credit. A lot of different things that we have, and we record these for the university. But we have live or virtual financial educational courses. Just ask your Affinity loan officer. We can help you walk you through that, or we can talk to you about it as well. But getting pre-qualified. So once you've done your budgeting, once you got yourself set up, get pre-qualified, that allows you to move quickly to find out, okay, what can I afford? So if you've saved that $2,500, you put that away for a year, 2 years, whatever you've done to get ready for that purchase, and you're like, okay, I'm ready to go. Our credit's in great shape. We're ready to make that $2,500 payment. What does that qualify me for? So you apply with the home loan officer, and they pull your credit, they check your pay stubs, your bank statements, your W-2s, make sure you've worked at the same place for 2 years. If you haven't worked at the same place for 2 years, they see if it's something equivalent, or if you just graduated from school or you just came out of residency. They'll take a look at that and figure out, okay, we'll use your income based on this. You should be fine. If it's something where you've changed your job recently and it's something completely different, we'll have to get an explanation on that. But with the pre-approval, we act as if you're buying a specific house at that price, send it through our approval engine, and kind of work the numbers that way to see if it approves you at that purchase price with a $2,500 payment. So the pre-qualification is a great way to go to see if you're approved. Now, I get the biggest question is like, oh, do you pull my credit? Typically getting pre-approved, you do get your credit pulled. It doesn't drop your credit scores like a lot of people say, as long as you're not out there shopping for credit with a bunch of different items. Like, oh, I opened up 2 department store credit cards. I went and opened up a new Visa. I opened up a new car loan, and I went shopping for a home loan this weekend. If you do that, yes, your scores are going to drop. If you pull your credit with me, you pull it with ABC Bank and CBS Bank. If you pull up 3 different credit bureaus or 4 credit bureaus within 45 days, your credit scores won't change if you're shopping for a mortgage with 4 or 5 lenders. So just keep that in mind. Before you have your credit checked, also check to see if it is if your credit's frozen. If your credit's frozen, we can't pull that report. So get it unfrozen first, then we can pull your report. Because if not, I have to kind of backtrack, go and have them pull it after you've had it unfrozen. So that's just a little bit of quick information based on the credit freezing. But it's a great way to protect your identity if you do have a credit freeze. Okay, and so most of the documentation with pre-approvals, you just want to get copies of your most recent pay stubs. Typically, we need 2 pay stubs. UW, you get paid the 10th and 25th, so we need 2 pay stubs. If you're a teacher or some of our other employers like Fred Hutch and there's a few others out there, they pay once a month. We need 2 pay stubs if you're paid once a month. And then if you're in a trade, a lot of times trades get paid every week. So with a trade, we'll need 4 pay stubs because we need the weekly pay stub for 4 days or 4 weeks. So pay stubs, copies of your most recent bank statements. Not everybody probably gets their bank statements. They're probably all online, but we can get those printed from your bank. We need 2 months typically to show where your closing costs and down payment are coming from. Need all pages. So if you have page 1 of 5 and page 3 and 5 have nothing on it, we still need to see 3 of 5 and 5 of 5. Then copies of your W-2s. We don't need the full tax returns for W-2 employees. We usually just need your W-2s for the last 2 years, just to show, yes, you've worked for ABC or whoever before, and then UW now, or if you've worked for UW for the last 4 years, we can see, yes, you've worked for UW for the least last 2 years. And then if you are self-employed, typically we do need 2 years of your most recent tax returns and a year-to-date profit and loss. And so, right, like right now, we would need to see at least last year's tax returns for 2023 and your year-to-date profit and loss from now until August 1st. So we would need to see what your income is. Sometimes they'll take 1 year if we have a year-to-date profit and loss with self-employed borrowers. Now, if you do have a second job, so if you have UW and then you do a part-time job on the side, we can only use that part-time job if you've been doing it for 2 years. So we have to show that you've had a full-time job and the part-time job for a 2-year period. Otherwise, we're not able to use it. Okay, next part, finding a real estate agent. And so with our program, we do work with some agents within the Puget Sound area. They give discounts from their commission towards your closing costs as well, just like we do. So we can put you in touch with someone. But if you're working with an agent, I don't want to pull you away from that relationship. So if you have an agent, you just let us know. Usually it's fine because we can work with anybody within the state. But you want to interview your realtors, find out if they're a real estate agent, find out if they're a realtor, find out what association they have, find out if they're a full-time agent. Or if they work 40 hours a week and then they do this part-time on weekends. You usually want to try and work with somebody that's full-time, because if you find a house, houses go so quick, you want to be able to say, hey, this just came up open. Can we go see it this afternoon? They'll be, yes, we'll go do it. Others, if they're working 40 hours a week at another job, they're like, I can show you at 6 tonight. Might be gone at 6. I've had that happen with customers before. So just make sure they're available to you. And with the realtors, if you're looking at a $750,000 house, find out if they're working with two other people or another person that's buying the same purchase price, because you don't want to be out there with them competing with the agent on his own or his or her own other buyers. So find out if they're working with somebody at the moment in the same price range as well. Because I've had that happen as well. They've made bids on the same house. But luckily it was different agents. Next part, find a home and make an offer. And so this is where the agent will help you guide you through making your offer. So it's typically about 18-page document, the contract that you're going to sign. You go through that. There's a lot of contingencies that protect you, protect your earnest money when you make that offer. So we want to make sure that you're making the offer, but you still have some inspections and some other things that you can fall back on if you want to back out. But getting pre-approved gives you an edge over other buyers because that pre-approval, we've checked everything. Only thing we need to do is probably update your bank statements and pay stubs and having a property. And then once we have the property, we can move pretty quickly. So once you get, and it's different in some counties, but some customers do a pre-inspection. If you're doing down payment assistance, you have to have a home inspection. Unless it's new construction, they do a warranty otherwise. But if you order a home inspection and they've accepted your offer, and so you've ordered a home inspection, make sure everything's in good working order, and you're going to move forward with the home, you want to let your loan officer know, because at that point, we need the purchase and sale contract. And that's when we can start ordering your appraisal and getting your interest rate locked in. So once you have that contract, that's when your rate can be locked in. That's when we order the appraisal. Nothing starts to cost money until we order that appraisal. So we get the purchase and sale agreement, and we work with the real estate agent to figure out, okay, is the inspection contingency over? Let's work with the agent and order the appraisal once the inspection contingency is over. Go to the next one, we'll shop for homeowners insurance. This one I used to kind of skip over quite a bit because everybody's like, okay, you have car insurance, you have homeowners insurance, you can bundle it, go with the company you usually have. You want to make sure your company is going to be, the company you use for car insurance can do homeowners insurance in Washington. There's been a lot of changes in insurance laws within Washington and in other states. So get your insurance done right away up front and talk with your insurance company if they're able to do your insurance. Or I have some insurance companies that won't do insurance for if you're doing down payment assistance. They'll only do insurance on homes that have one lien or two liens. If you have multiple liens, like some of these down payment assistance programs where I have 3 or 4 liens, some insurance companies won't touch you. They won't insure that property because there's too many liens on it. So be careful of that. HomeStreet does have a HomeStreet Insurance is also part of HomeStreet Bank. They have they're a broker and they use about 8 different insurance companies, and they have a couple insurance companies that will do 3 or 4 liens if you need to. But it's always good to shop for insurance. I don't want to sound like a commercial, but shop for your insurance. Also look for the bundle to make sure, okay, my car, my house, my belongings, all that tied together. Does it save me a little bit more money? It can save you if you do bundle that. But check with other companies as well, because maybe your company might not insure you in this state. So you just have to be wary of that. It's happened a lot more in Hawaii, Washington, California. I know those 3 states. I think Oregon might even be in there as well. That's getting tougher to insure in those areas. Okay, next part. This I kind of touched base, but once your inspection contingency is over, we want to get the approval. We want to get the appraisal ordered. Mainly, we get the approved results of the home inspection. We get the disclosure sent out to you, your intent to proceed. That's when we get the appraisal ordered. We want to get that done because that's usually the last thing. So we get that appraisal, we get the appraisal ordered. You may sit and wait a week to 2 weeks, and we don't really do much from there. Except for maybe wait for your insurance to come in or an updated pay stub. It's a little bit of waiting. And then about 3 days prior to closing, we'll send out what's a CD or a closing disclosure. With that closing disclosure, it's about, like I said, 3 days to a week before you close. It has all of the costs, all the closing costs, everything that you'll have on that loan. And it should be similar to the lending estimate that you locked in when you originally when you originally locked in your loan. It should be pretty close. We have to keep those fees within a certain tolerance. And some we have to have exact. So, excuse me. Um, so if your closing disclosure indicates out-of-pocket closing expenses, your closing agent will notify you and let you know this is the cash you need to close. Now, with cash to close, you can't bring in cash. You can't bring in a check. You have to bring in a cashier's check or money order, typically cashier's check or not money order. I'm sorry, cashier's check or a wire transfer. Now, the cashier's check, you can get most of your institutions, your banking institutions. With the wiring funds, you want to also be careful of that as well, especially if it comes in early into the transaction. There's a lot of wire fraud where they'll spoof your email to your loan officer, they'll spoof your email to your realtor. And what they'll do is they'll know you're buying a house. And so they send you this email and say, oh, we need the 5% sent to us by Monday. Otherwise, we might lose this property. So you want to be careful if there's anything saying like even numbers like that, like 5% instead of 5% plus your closing costs, because it might not be correct. I've had a customer that this happened to. They spoofed their realtor's information. They said, we need this money by Monday or you could lose the house. Well, they weren't going to close until the next week. And they're like, why do we have to send this? So they called the agent up and he was like, no, nobody should be asking you for 5%. Plus it was 5% plus closing costs. And for is what they needed to bring in at closing. So they questioned it. And luckily they questioned it because that Monday was Martin Luther King holiday. And so they couldn't wire the money on Monday. They're like, we can't wire it Monday. We're closed. The bank's closed. And so that's why they asked. So if it sounds weird and like it's rushed, you want to be careful with your money. Don't transfer that unless you know for sure you've been speaking with escrow. They called you, you called the escrow up and you said, okay, what are your wiring instructions, and work with them on that. So if it's just some blanket email saying, oh, you got to send us money here, be careful of that. Call your loan officer, call your real estate agent, call your title company directly. So just kind of keep that in mind because there is still a lot of fraud for wire out there. Next part, I'll talk about resources and just some of the things that you could look at for homes. American Financial Solutions, they're a nonprofit that we work with. They're a credit counseling agency and a financial education agency. So they can help you with some education with buying a home. They have foreclosure prevention, bankruptcy prevention, but you can find them at myfinancialgoals.org. They're based out of Bremerton. They have a couple they have an office in Seattle as well. Great program to help you with, especially if you get in over your head with credit card debt. They can help you pay that credit card debt off with their plans that they have. They do charge money for that. Everything else they do is usually free. It's the credit counseling they do charge for that. Next one is Fannie Mae. That's one of our investors that we work with as a bank. We sell our loans to them. We still service as HomeStreet Bank those loans in most cases. The down payment assistance loans, we don't service those. Those go to one place to service. You got FHA, which is Federal Housing Authority or Administration, sorry. It ensures low down payment purchases and renovation loans. So you can get in with 3.5% down. Renovation loans, you can buy a house, fix it up, use your improved value as your appraisal. They take a little bit longer, but you can get your house fixed up before you move in. Fannie Mae, you can do 3%. FHA is 3.5%. Freddie Mac is another secondary investor, just like Fannie Mae. We sell to Freddie Mac as well. They do 3% down. You don't have to have 20% down for conventional loans. The conventional is Fannie or Freddie. And so you can do 3%, 5%, 10, and even more for down payment if you need to. But you can find them at freddiemac.com. HomePath, they're typically properties owned by Fannie Mae, homepath.com. There's another Home Steps is Freddie Mac's website. You can look at homes that are owned by Freddie Mac and Fannie Mae. It's a great way to look for homes, see if you can find something in your area that you're looking for that might be foreclosed on, and they're selling it at a discount to get rid of it. There's probably not as many out there as there has been in the past. Back when we put this on here in 08, 09, there was quite a few HomePath houses. It was a great way to get into a house. Okay, next, resources is HUD, Housing Urban Development. So you can go to HUD.gov and they talk about different programs within their resources and the home buyer resources. USDA Rural Development. The USDA loan is a zero down program. If you're buying in a rural area, in some counties, it's all the county except for the major cities. King County, it's mostly Eastern King County. Kitsap County, it's pretty much everywhere except for Bremerton, the city of Bremerton. Pierce County, it's quite large. It's a quite large area for Pierce County for USDA. So it's a great way to get in. And they do allow zero down programs on manufactured homes now. I think it has to be a 2006 or newer for a manufactured home for USDA, which is a huge increase. Now, if you're a veteran, we have the VA loans for any veterans out there. You can get in with zero down. They have great programs for veterans where we are a veteran lender. But you can go to benefitsva.gov and for home loans and talk about what your programs are. But we do VA loans as well, and down payment assistance works with most of these programs. And what I'll do, I do want to touch base. Let me go back. One program that I haven't really touched base on is there's a new program that came out. It's from Washington State Housing Finance Commission, but it's called the Covenant Loan. So the Covenant Loan is a program that launched July 1st of this year, and it's for persons of color, for African American, Latin, Latino descent, Korean, Pacific Islander, Native Hawaiian, and Native American. For any of the families that have lived in Washington State that are first-time home buyers, and their families lived in Washington State since April of 1968 or prior. And so it's a program that's helping those families that may have been discriminated upon before 1968 to buy into a home. And so it's a 20% down payment at 0% interest, and they have special first mortgage interest rates with it. So if you and it's up to 150,000. I'd have to double check. It's 150,000 for down payment plus closing costs. So if you so the max purchase price, let's say you bought a $750,000 house, they'll give you $150,000 plus closing costs to get into that home, and you just have a $600,000 loan at, let's say, 6.25% interest rate. So I think that's roughly the rate right now. I'd have to look at what the rate is, but it's a 0% loan, a silent second. You have no payments on for 30 years for the 20% down and the closing costs. But you do have to prove you've had a family member, a grandparent, a parent that have lived here since 1968 or prior. And that's probably the toughest part about the program, is getting that proof. But with that program launch, they have so much money. I believe they said about 75 million per year that they're projecting to have for first-time home buyers within Washington State. And there is an income limit of 100% median income for Washington State. So depending on what county you're buying in, it can be a really good opportunity for someone that has not bought a home, but they've lived in Washington State, or their family's been living here for quite a while. So I can get more information on that later. I don't have a lot of it because it just came, like I said, it just came out July 1st. Excuse me. And so the last part I'll talk about before I open up for questions is the benefits package that you have with UW and with HomeStreet Bank. And so we're a non-commissioned loan officer, so we can pass, because we're not getting commission, we can pass that savings on to you, where you get a 0.5 point towards your closing costs. So let's say you have a $500,000 loan, you get $2,500 credit from HomeStreet. As a loan officer, we pass that on to you. You have to contact one of the loan officers in our program. And then our realtor rebate is anywhere from a 0.5 point to 1%. So if you bought that house for $600,000 with $100,000 down, they can give you anywhere from $3,000 to $6,000 towards your closing costs. So you can get a $5,500 to $8,500 closing cost discount from us and the realtor for buying a home, in that example. So we have exclusive workplace checking. They also have discounts on vehicle loans and personal loans as well. Our checking account is the same, almost the same exact account that we have with an employee. Down payment assistance programs, we work with a multitude of down payment assistance programs within every county. Financial fitness tools and resources, our seminars that we do from budgeting to first-time home buyers, down payment assistance, credit information. So there's different things we work with. We have toolkits, podcasts, and more. Dedicated website for your benefits and resources that you can access. We do answer our phone Monday through Friday, 8 until 9 at night. And then Saturdays, it's from 9 to 5. And so we do have somebody available during those hours to answer questions. May not be able to meet with us in person all those hours, but we do have somebody available by phone if we need to. The other nice part is immediate family members can also get the mortgage benefits with this. So if your parents or your children are buying a home, they get the same discounts you do. You just have to get a pay stub showing that you work for the University of Washington. They get that discount. And then last, again, I mentioned it prior, the Affinity benefits come through our program with the Affinity department. So you want to contact myself, Jessica, Denise, or Ryan. We're the ones in the Puget Sound that work with this program, so we can pass on the discounts to you. But if you have questions, if you don't have time today, because I'm trying to get this done within 50 minutes, so thank you for your patience. It's a lot of information, and every single person is different. I mean, like I said, probably out of 10 people, 9 people will probably pick a different program. But my information's here. Our hotline is the 206-628-0207, but you can also email me questions at jeff.wood@homestreet.com. Thank you for attending today. I appreciate it. I'll open it up for questions, Sebastian. And again, hopefully you're not spinning with all the information.
Yeah. So we did have a few questions come on through. First one being, Sammy asks, is there any down payment assistance without income limits?
The main one we have, the closest one we have right now is the Home Advantage, and it's 180,000. We do have one that's specific to UW, but that's a program that's through the HR department that we work with, and there's no income limits on that, but that's a specific UW program that we work with at HomeStreet. That's the only one I can think of. There's no income limits. Unless you have a spouse that works for one of our other agencies, like I know, like I have some that will give you $100,000 if you go to work for them. So if I have a UW employee and their spouse works at this other company, they'll give $100,000. There's no income limits with that. So there's different programs out there, but it just depends on kind of where you live and where you work. But with most of our programs, they do have income limits within Washington.
Thanks, Jeff. And looks like someone had a question. Bernard asked, can you piggyback grants / down payment assistance to make the total higher?
Yes, you can increase it. So if you're looking to try and increase your purchase price because you want to put the extra down payment on there, you can do that. And so you can increase your purchase price the more you layer on there. I've layered up to 5 or 6 loans at times. So it just depends on the type of entity that you're working with. Like the land trust or the habitat loans, we work with 5 or 6 liens at sometimes. But it really depends on the program. We also have a couple other programs, and we don't have those in the slide, but they help with family members that have a disability. So if you have a disability, depending on which county you're working in, living in, there's Pierce, King, Snohomish. We have different programs that we work with that will help get you extra money for down payment assistance if you have a disability. And it just typically means that you qualify under the 1990s Americans with Disabilities Act. And we just have to have a doctor's note stating that that you qualify for that. We don't want to know what the disability is. We can't ask. We just have to know that the doctor said, yes, you qualify for the Americans with Disabilities Act. So most of the programs, there's one that works statewide in Washington that's 15,000. That can also be added with other down payment assistance. But there's Snohomish and King County, which I've used up to 90 or 120,000 in assistance. And that ties in with other programs too. In Pierce County, I want to say it's 20% down. So there's different entities out there. So that one has income limits as well, but it also has the disability portion on it. I did forget about that one.
Thanks, Jeff. And it looks like follow-up question would be how do you find homes that are on land trusts?
So I mean, you can reach out to me and I can kind of give you a couple different ideas of where to look. It depends on where you're buying. Like I work with one in Seattle, or two in Seattle, I should say, because Habitat is now a land trust technically. I work with one on Bainbridge Island. There's one in Snohomish. There's a huge one in Bellingham. There's one over in Chelan. There's one down in Vancouver that just started up. So it really depends on which ones we work with. Some banks will work with one over another just because they're used to working with that bank. I work with the ones that I work with because I've known them since I've started here at HomeStreet. They reached out to us and we've worked with them. So a lot of companies will go out, or land trusts will go out and seek banks that know what they're doing when they want to do land trust loans. So.
Thank you. And it looks like Luby asked if do you have any recommended lenders in Eastern Washington, specifically the Yakima or Benton counties?
We can do anywhere in Washington State. So we work anywhere. We do have, I mean, I've done quite a few loans in Yakima and Benton County. We do have some Spokane realtors that are not realtors, Spokane loan officers that we can work with. But I mean, most of the times we can do those loans here in Seattle.
Great. Thank you. It looks like Trey was asking, I think probably regarding Fannie Mae, possibly as like median income or household income, though I might think we might need an elaboration there.
So the median income, let's see if I can pull up real quick on the Housing Finance Commission site. I'll share the screen here real quick if it's, we got a little bit of time here. So this is the Washington State Housing Finance Commission website, and it won't let me, oh. Grab it. Okay, let me see if I can increase this. There we go. Okay, just trying to get that to open. Okay, so if you go into the Housing Finance Commission website, it has a plethora of information on here. You can go through, you could probably get lost. I typically go here to home ownership, and the main thing is going into rates. This is the quickest way I've found to find the information. So if you go in here and click on rates, there's Home Advantage and House Key Opportunity. So if you click on House Key Opportunity, it'll show 80% median income. So this is 80%. And so 80% median for King County is 109,280. So it's gone up a little bit. So this is for a family of one. And so it depends on your size of family. There are other charts, but this kind of gives you a quick estimate of what your median income for 80% median or 80% for your county is. Now, if you went to, let's say you're doing a Habitat or the CLT loan, it's 65%. This is lower to moderate income. And so it shows you one person all the way up to 8 persons. So King County, you're sitting at 68,500 for one, 2 people, 78,000, and so it goes up from there. So that's 65%. And then I know they have 100% on here, and I don't have the 100% handy. it's harder to find if I remember right, because I had to ask them. But the 100%, but the 80% is the kind of the main one for most of the programs. And then the 100% typically, so that's 80% of that. So you can take the 109 divided by 0.8, and it'd be about I see 109, 820 divided by 0.8. You'd be about 137, I think, for one person for 100% median income. So they just changed these limits. So I'm getting used to these new limits on here. And that's another thing. If you have a question on your income based on the AMI, I can help you look that up as well.
Thank you, Jeff. And it looks like we had a couple raised hands. Bryce, I believe your hand was also raised. If you'd like to ask your question. If you're still
Yeah,
hanging
I'm
out.
still here. Actually, yeah, thank you. Bryce Edward here. So this is the dumbest question of the day, but do you work with lenders who specialize in first-time homeowners or home buyers over age 50, or do you have any recommended resources to at least start the process?
So we are the lender, and so we work. I mean, there's no you can't discriminate based on age for lending. As long as you're 18 or older, you can buy a house if you're 95 and put it on 30-year mortgage. So we don't look at one age over another. We look at qualifications based income, credit history, and if you're able to qualify based on the criteria of our debt to income ratio, we got to keep that under a certain percentage for first time home buyers. So we want to keep it. So the debt to income ratio would be your gross income, and we don't want to usually go over 45% of your gross income towards total bills. So on let's say a 10,000, to make math easy, $10,000 gross income per month, we'll take $4,500 can go towards bills. So if you have $500 car payment and nothing else, the $4,000 can go towards your house payment. So that's roughly kind of a rough way to figure out what you would qualify for a home loan.
So essentially the process is the same regardless of your age. There's no special
Correct.
consideration. Okay.
Yeah, and the only thing I'm doing one right now where if you're buying in a 55 plus community, you have to have at least one of the buyers has to be 55 plus. I mean, technically, I don't think you both have to. I think you actually can buy and not be 55. I don't think they can discriminate based on age. They can limit who buys it based on it, from what I've heard, but I've seen where people don't have to be 55 and be there. So they can still own it.
Thank you.
You're welcome.
Sushil, I see that your hand is also raised. If you'd like to ask your
Also
question.
now unmuted.
Yeah, I walked in late. Could you give me your name, the person, who was presenting, and also your phone number? Because I would like to set up a meeting. I am blind and I am a UW faculty, and I'm interested in talking to you. Yeah.
Sure. Let's see. Jeff, would you mind reading off?
Sure. My name's Jeff Wood, Wood. My direct line is 206 369 8939.
369 8969
8939.
8939.
Aaron Alexander has left the meeting.
Okay, I'll repeat because my screen reader is interfering as people are moving out. 369 8939.
Yep, 206 area code.
Yeah. Okay. And Jeff Wood. Thank you. I'll give you a call.
Thank you. And I know we are running a bit over, but there are a couple of questions. Jeff, would it be okay to answer them, or should we? Okay. In that case, let's see here. Just a couple more. I think Trey also asked if Fannie Mae offers 5% down payments for loans for owner-occupied 2, 3, and 4 unit homes. Would the down payment assistance be available for this loan?
They will do 1 unit and 2 units from what they just changed their guidelines to do. They allow 2 units from what I've seen. But I believe it's 2 units, but you can call me, we can look at that up. If you want, touch base with me, just email me and I can, look it up and we can talk about that as well. Just for time wise.
Sounds good. And then I think just 2 more questions here.
Okay.
Looks like may have missed this, but do all the assistance programs mentioned to apply to purchasing a home in Washington state only, or can they be used for employees living in other states?
So we have down payment assistance in most states that we work in. I like California, they have quite a few different programs. I only do Washington state with down payment assistance. We do have loan officers in Oregon, Oregon, California, and Hawaii that do down payment assistance. At this moment, I don't think we have any other states other than those 4 that we do down payment assistance in, just because typically you have to have a presence or a brick and mortar store in those states. Like I can lend in Alaska, but we don't have a branch in Alaska. So we can't do down payment assistance there, but they do have it. So each state has it. It just depends on which state you're looking at. But if you are buying in California, we do have some loan officers that do California down payment assistance. I would refer it to them.
Understood. Thank you. And last question here. Looks like, is mortgage insurance usually required if not putting down 20% as a first-time home buyer?
Mortgage insurance is required on most loans less than 20% down. Now, if it's a land trust or if there's built-in equity when you're buying the home, typically there is not mortgage insurance. That's what makes the land trust loan so attractable, because you can put in 1% or $3,000 and not have mortgage insurance. So it's a great way to get into a home and make it and have it affordable, but it's not a going rate market on the house. You're getting the house at a reduced cost. And what's nice about those is the property taxes are often reduced as well. But if you're putting less than 20% down, mortgage insurance is always required on the loan, unless you have a special program where you're doing a special second mortgage within the home. But there's not too many second mortgages out there anymore.
Got it. Well, thank you so much, Jeff, for taking the time to share all of your knowledge with us. And thank you, everybody, for attending today. Like I said, the session has been recorded, and also I will be sending out the slides as well. I just wanted to say, I hope everybody has a good rest of their Thursday. And Jeff, again, thank you so much.
Yep. Thank you.
Yes. Take care, everybody.
Thank you.